Welcome to your deep dive. Today, we're going into Chicago commercial real estate,
Okay.
specifically a concept called dark value.
All right.
We're going to be using an article by Michael Linton.
Okay.
He's a veteran Chicago commercial broker.
Mm-hmm.
You can find this on his website, chicagodealflow.com.
Gotcha.
Now, you might be thinking, what is dark value?
Right.
And why should I care about it?
Yeah.
Well, we're about to find out.
Absolutely.
We're going to uncover the hidden risks and opportunities that dark value presents for anyone interested in Chicago real estate.
For sure.
Yeah.
Michael Linton, he's got almost 4 decades of experience in this market.
Wow.
He's seen firsthand how this concept plays out.
Yeah.
He's not just an academic.
Right.
He's out there in the trenches, making deals, advising clients.
Yeah.
So his insights are incredibly valuable for anyone looking to invest in Chicago.
I'm intrigued.
Yeah.
Let's get down to it.
Okay.
What is dark value? It sounds kind of like something out of a Batman movie.
It does. It does.
A little ominous, right?
Right? Maybe.
It's not quite that dramatic,
Okay.
but it does highlight a potential dark side of real estate.
Oh, okay.
In simple terms, dark value is the estimated value of a commercial property.
Mm-hmm.
If the main tenant leaves or goes dark,
Okay.
think of it as the property's value in a worst-case scenario.
So it's about assessing risk, looking beyond the surface,
Absolutely.
and considering what happens if things go wrong.
Exactly.
So say you have like a big box store
Right.
in a suburban shopping center.
Yep.
Everything seems great.
Mhm.
The store is busy. Rent is coming in.
Right.
But what if that store decides to close?
Exactly. That's when dark value comes into play.
Okay.
All of a sudden, that property isn't generating the same income,
Right.
and the owner has to scramble to find a new tenant.
Yeah.
And as Michael Linton points out, finding a replacement that's willing to pay the same rent as that big box store
Yeah.
can be a challenge.
It's a big space to fill.
It is.
Right. Who else needs a space that big? You might have to divide it,
You might.
renovate it, offer lower rent.
Exactly.
Sounds like a potential headache for the owner.
It can be.
Yeah.
And that's why lenders and investors pay close attention to dark value.
Okay.
They want to know that even if the worst happens,
Mm-hmm.
the property still has enough underlying value to justify their investment.
So it's not just about the current tenant and the rent they're paying.
Right.
It's about the property's inherent value, its ability to generate income,
Exactly.
even in a less than ideal situation.
Precisely.
I love
And
that.
that's where things get interesting.
Right.
Because dark value isn't just a fixed number.
Okay.
It's influenced by a whole range of factors.
What? Give me some examples.
Okay, so think about location.
Okay.
A property in a prime downtown area might be less vulnerable to dark value
Okay.
than a similar property in a struggling suburb.
Okay. So location matters.
It does.
Why is that?
Because even if one tenant leaves in that prime location, there's likely to be high demand from others who want to be in that desirable location.
That makes sense.
Right.
So location is key.
Location is key.
What else affects dark value?
The type of property matters too.
Okay.
A single-tenant retail space,
Mm-hmm.
like that big box store we mentioned, generally considered higher risk than a multi-tenant office building.
Yeah, because if that one retailer goes dark, the whole property's affected.
Exactly.
But if you have multiple tenants in an office building, the impact is spread out.
Exactly. You're getting it.
Okay.
And then there's the condition of the property.
Yeah.
A well-maintained modern building is likely to attract tenants,
Mhm.
even in a tough market,
Right.
while a rundown property might struggle to find anyone
Yeah.
willing to pay decent rent.
Makes sense.
So it's not just about the tenant,
Right.
it's about the property itself
Yeah.
and its ability to compete in the market.
Gotcha.
And Michael Linton highlights this in his article. He emphasizes that understanding dark value is crucial for anyone involved in Chicago real estate.
Okay.
Whether you're a lender deciding whether to make a loan,
Mhm.
an investor evaluating a potential acquisition,
Right.
or even a tenant trying to assess the long-term stability of their lease,
Yeah.
dark value matters.
Wow. This is way more complex than I initially thought.
It is. It's fascinating.
So we've established that dark value is about assessing risk,
Yes.
looking beyond the current situation,
Right.
considering what happens if a major tenant leaves.
Absolutely.
We also touched on some of the factors that influence it,
We did.
like location,
Mhm.
property type, and condition.
Yep. And we're just scratching the surface.
Oh, okay.
What's fascinating is how Michael Linton connects this concept to specific examples in the Chicago market.
Okay.
He talks about the challenges facing single-tenant retail spaces in areas like Schaumburg and Hoffman Estates,
Okay.
the potential vulnerability of suburban office parks, and even the dynamics of high-rise office buildings in the Loop.
Okay.
Yeah.
This is where it gets interesting for me.
Yeah.
I'm starting to see how dark value isn't just some abstract theory.
Exactly.
It has real-world implications for specific properties and neighborhoods right here in Chicago.
Absolutely.
Yeah.
And that's what we're going to explore in the next part of our deep dive.
Okay.
We'll delve into some concrete examples of how dark value plays out in different scenarios.
All right.
And we'll start to unpack Michael Linton's strategies for mitigating this risk.
Okay. Sounds good.
So stay tuned.
I will.
Welcome back to our deep dive into dark value in Chicago's commercial real estate.
I'm ready for those real-world examples you mentioned.
All right.
How about we start with the suburbs?
Okay.
Michael Linton mentions Schaumburg and Hoffman Estates as areas with potentially higher dark value risk
Right.
due to their reliance on big box retail.
Mm-hmm.
Can you elaborate on that?
Yeah, absolutely.
Okay.
So imagine a hypothetical scenario where a major retailer in one of those large shopping centers decides to close its doors.
Okay.
The immediate impact is obvious.
Right. Loss of income.
Right, a significant loss of rental income for the property owner.
Yeah.
But the ripple effects can
Yeah.
be much broader.
I can see that.
Yeah.
Fewer shoppers at that center,
Right.
potentially impacting other businesses.
Absolutely.
It could even lead to a decline in property values
It could.
for the whole area.
For the entire area, exactly.
Yeah.
And as Michael Linton points out,
Mhm.
finding a replacement tenant for a space that large can be a major challenge.
Right.
You might have to divide it into smaller units,
Okay.
which often means lower rent per square foot.
Yeah.
Plus, there's the cost of renovations
bit.
and the time it takes to find new tenants.
Yeah. It all adds up.
It does.
So the dark value of that property
Right.
could be significantly lower than its value
It could be.
when it was fully occupied by that big box retailer.
That's right. And this is why lenders are particularly cautious about financing single-tenant retail properties.
Right.
They know that if that one tenant goes dark,
Yeah.
the risk of default on the loan increases substantially.
Higher risk, yeah.
Higher risk.
So higher dark value risk
Yeah,
often translates into less favorable loan terms,
it does.
maybe a higher interest rate,
Right.
or a lower loan-to-value ratio.
Precisely.
Yep.
And for investors,
Yeah.
it means factoring in a larger potential downside
Right.
when evaluating a property.
Yeah.
They need to ask themselves, what's the worst case scenario if this tenant leaves?
Okay.
And can I still make a reasonable return on my investment?
Good questions to ask.
Very important questions.
So this highlights the importance of understanding the local market.
Absolutely.
What might be a high dark value risk in one area
Right.
could be less of a concern in another.
Exactly. That's a key point that Michael Linton emphasizes.
Okay.
He talks about the difference between those suburban retail centers and office buildings in downtown Chicago,
Okay.
particularly the Loop.
Okay, let's shift our focus to the Loop.
Let's do it.
How does dark value play out in a market like the Loop,
Yeah.
which is known for its high density of office space?
So let's consider a hypothetical example.
Right.
Imagine a high-rise office building in the Loop
Okay.
with a major law firm as its anchor tenant, occupying several floors.
Okay.
Now, let's say that law firm decides to downsize or
Uh-huh.
relocate.
So you have a large chunk of vacant space
Right.
in a prime downtown location.
You do.
Wouldn't that be a major hit to the property's value?
It certainly could be.
Yeah.
But as Michael Linton points out, the Loop has a few things going for it that
Okay.
mitigate that dark value risk.
Like what? I'm curious.
Well, first,
Yeah.
there's the sheer demand for office space in the Loop.
Right.
It's a central business district,
Right.
home to major corporations,
Mhm.
financial institutions,
Yeah.
law firms. So even if one tenant leaves,
Yeah.
there's a good chance others will be eager to move in.
I can see that. The location itself
Right.
is a major draw.
Exactly.
Yeah.
And second,
Okay.
the Loop tends to attract a diverse mix of tenants.
Okay.
You have large companies,
Mhm.
small businesses, startups,
Right.
all looking for space.
Yeah.
So even if you lose a big tenant,
Yeah.
you're not limited to finding another one the same size.
Great.
You might be able to attract several smaller tenants
Okay.
to fill that vacant space.
So that diversification of tenants
Right.
actually helps to reduce dark value risk.
That's right.
Interesting.
And third,
Yeah.
property owners in the loop
Mm-hmm.
are often more proactive
Right.
about investing in their buildings,
Right?
keeping them modern and attractive
Yeah.
to potential tenants.
Yeah, they know they're competing
They do.
for those tenants
Exactly.
in a high-demand market.
And all of these factors,
Okay.
the strong demand, the tenant diversity,
Yeah.
and the proactive property management,
Okay.
combine to create a more resilient market,
Okay.
one that's less susceptible
Yeah.
to the negative impacts of dark value.
So location and property type
Right.
play a huge role in determining dark value risk.
They do.
But what about individual investors?
Yeah.
How can they use this knowledge
Hmm.
to make smarter decisions?
That's where Michael Linton's insights become truly valuable.
Okay.
He doesn't just explain the concept of dark value.
Yeah,
He offers practical advice on
Oh.
how to mitigate it.
that's what I'm here for. Practical strategies
makes
I
sense.
can actually apply.
Exactly.
Let's hear it. Okay, let's get to that actionable advice.
Yeah.
We've covered what dark value is,
Right.
how it plays out in different scenarios.
Absolutely.
Now, let's talk about what investors can actually do
Okay.
to minimize this risk.
Right.
Michael Linton, he outlines some strategies in his article, right?
He does, and they're all about being proactive and thinking long term.
Okay.
It's not just about reacting when a tenant leaves.
Right.
It's about building a resilient portfolio
Gotcha.
that can weather those storms.
All right, so let's dive in. What's the first strategy Michael Linton recommends?
He's a big advocate for diversification,
Oh, okay.
and not just in the traditional sense of spreading your investments
Right.
across different asset classes.
Yeah.
He specifically talks about diversifying your tenant mix.
So instead of having one major tenant occupying an entire building,
Right.
you'd aim for a variety of smaller tenants.
Exactly.
Okay.
Imagine you own a multi-tenant office building.
Okay.
Instead of leasing half the space to one large company,
Mhm.
you could target a mix of smaller businesses,
Right.
startups, maybe even co-working spaces.
That way, if one tenant decides to downsize or relocate,
Right.
the impact on your overall income,
Exactly. Less severe.
you're spreading the risk,
Gotcha.
creating a more stable income stream.
Okay.
And this applies to retail properties as well.
Instead of relying on one big box store,
Right.
you could aim for a mix of smaller shops, restaurants, service providers, anything that creates a vibrant and diverse tenant community.
Makes sense. So diversification is key.
It is.
What else does Michael Linton suggest?
He emphasizes the importance of proactive lease management.
Right.
This isn't just about collecting rent checks.
Hey.
It's about building strong relationships with your tenants,
Yeah.
understanding their needs,
Okay.
anticipating potential issues before they become major problems.
So it's about being a partner, not just a landlord.
That's the idea.
Okay.
Regularly check in with your tenants,
Mm-hmm.
see how their businesses are doing,
Right.
ask if they have any concerns about the space.
Yeah.
This open communication can help you identify potential vacancies early on
Right.
and even negotiate early renewals with key tenants.
I can see how that would be valuable.
Yeah,
If you know a tenant is struggling or planning to expand, you can start planning for those changes instead of being caught off guard.
exactly.
Yeah.
And it shows your tenants that you care about their success,
Right.
which can go a long way in building loyalty
Yeah.
and reducing tenant turnover.
Right.
And that brings us to another strategy Michael Linton highlights,
Okay.
property improvements.
Okay, this is about keeping your property competitive right,
Absolutely.
making sure it's attractive to potential tenants.
Regularly invest in upgrades and renovations,
Okay.
even if you don't have any immediate vacancies.
Okay.
Think modern finishes, energy-efficient systems,
Right.
common areas that foster collaboration or relaxation,
Hmm.
anything that enhances the tenant experience
Okay.
and justifies premium rents.
So you're not just maintaining the property,
Right.
you're proactively enhancing its value.
Exactly.
Yeah. And that can help mitigate dark value risk.
It can.
Because
Sure.
even if a tenant leaves,
Right.
you're more likely to attract a new one quickly
Exactly.
at a favorable rate.
And finally, Michael Linton emphasizes the importance of location, location, location.
Right.
This might seem obvious,
Yeah.
but it's particularly relevant
Mm.
when considering dark value.
Because a property in a thriving, diverse market
Right.
is less vulnerable to the negative impacts of a
Yeah.
tenant leaving.
Exactly.
There's always demand from other businesses
Right.
looking to move into that area.
Think about areas with a mix of industries.
So,
A growing population, strong transportation links,
Mhm.
and a vibrant community.
yeah.
These factors contribute to a more resilient market,
Right.
one that's less likely to be significantly impacted
Right.
by the loss of a single tenant.
This all makes so much sense.
It does.
It's not just about finding a property with a good tenant in place.
Right.
It's about understanding the bigger picture,
Absolutely.
the market dynamics,
Yep.
the long-term potential of the location.
And that's where Michael Linton's expertise really shines.
Right.
He's been navigating the Chicago real estate market for nearly 4 decades.
Wow.
He understands the nuances of each neighborhood,
Mm-hmm.
the growth patterns,
Yeah.
the factors that contribute to long-term value.
This has been an incredibly insightful deep dive.
Good.
I feel like I've gone from knowing nothing about dark value
Yeah.
to having a solid grasp of the concept
Awesome.
and how to apply it to my own investment decisions.
That's great.
Yeah.
If you want to explore this further, I highly recommend visiting Michael Linton's website,
Okay.
chicagodealflow.com.
Right. We'll link that in the show notes as well.
Perfect.
He has a wealth of resources there.
He does.
Articles, case studies,
Yeah,
even contact information.
Yep.
If you want to reach out to him directly,
absolutely.
understanding concepts like dark value can give you a real edge in the world of commercial real estate.
For sure.
So keep learning, keep exploring, and stay ahead of the curve.
That's